All right, guys, here we go. A few requests to break down the charts on the U.S. markets, Dow Jones, S&P 500, NASDAQ. So here we go. And first of all, I want to say, people were saying, commenting about, the markets just, can crash overnight, so on and so forth. Well, even back with the COVID slam down, when that came out, we were already, I'm not going to say in a parabolic move, but we were moving up pretty quick, even for the Dow Jones. And, simple trend line here. I mean, there's always, cracks in the dam, water leaks, stuff like that to give you clues or a hint that things might be, busting loose at some point in time. Then also, actually, we had a wedge formation here, technically. Uh, and you know how those go, an ascending wedge always break, not always, but high percentage of time breaks to the downside, okay? And then, V-shaped recovery there, so on and so forth. And then here we are, starting back, first of 2021 on this trend line here, and finally broke it in January of last year. Couldn't get back, see, broke down, couldn't get back over it. And then here we are trading under the 20. And kind of a little off topic there. 83% of the time when you lose uh, regarding the market direction, you think you're going to go long or you're thinking to go long, and you do that and you get stopped out, or if you think about going short and you do that and get stopped out, high percentage of the time you're trading against the 20. You need to be trading with the 20. When price is under the 20, and especially when that 20 is rolled over, you want to be thinking more short, continuation to the downside until that thesis is negated. Okay. And then also on an uptrend, trying to be fancy and slick. I mean, you can do that, but you're risking uh, you know, a lot, profit there, obviously, by trying to fight the trend. You can't fight Mother Nature. She's undefeated, and so is the market regarding trend and direction. So you just have to go with it. So kind of, keep that in the back of your mind. Now, right now, as you can see, what we're going to look at first, let me pull this in here so you can see it. Uh, this was the all-time high, came down. So we're just going to look at this leg of the run down. Okay, and as you can see, we're back up, but more importantly, we're above that 50% zone. We're above the halfway zone of this leg down. That's extremely important. Okay, that's very bullish. And also near term, we have, well, the 200 simple week moving average is here, and the 20 simple week moving average is there. And then guess what? Yeah, price is above both. So it's a lot more bullish now than bearish. Now, have we come back up to the all-time high? No. But what we've done, we've cleared it, and these are weekly candles, so it's not like we just did this on a 2-minute chart or an hourly chart or something. This is quite a bit of consolidation up here. So we came back up, down, up, almost like a V-shaped recovery, consolidation here, possibly accumulation actually from institutions, because they didn't want to drive the price up. So, it's either distribution or accumulation in these sideways consolidation zones. And then you just wait for, the breakout or the breakdown to determine, which way the institutions, the big money, the whales, whatever, are going to take it. So, fairly bullish now. They do have a, high pivot here, high pivot there. And the pivots are just, on the way up is a green candle, then a red candle, and it does a 180, like right here is a great example. And it doesn't have to be all green candles or all red candles. A pivot is just simply, an opposite color candle. Green, red, pivot to the downside. Right here, red, green, pivot to the upside. And these are really the most important areas on the chart, for forecasting potential price movement. Because that was in order to move the market or market to change basically on a dime, do a 180, that's a significant, market decision there. Okay. So yeah, we're now above that halfway zone of the very to the height of the low. Very impressive and above the 20. Now, what if we drop below that? Okay, now this what, let me take this all kind of cleared up. And what we done next is measured from the low to the high. And how we do that, we just pop our fib line there, low to the high. And as you can see, that 0.5 fib, basically the halfway zone, we put that green dash line there, okay? Now, what happens if we get under it? Well, on the bigger one here, the 50% zone, that would be like in the fourth quarter of the game being down, a touchdown or a touchdown and a field goal. Okay, that's, it's not good, but you can make it up. Getting under this level, 50% from the low to the high, would be like being down, two touchdowns in the fourth quarter. Okay, you can come back, but it's going to be a lot, a whole lot harder. Okay, plus you're going to be under the 20. You don't really want to do that. And so yeah, we at the very least we need to, and we could end up, putting in something like up, down, up. We like to, look at, moves in threes, okay, in that situation. So, that's what, that has to do with. And let me see. And I need to point this out. The little high pivot here, also that was, resistance. And that comes from, well, that leads to rather this area here that, we're, kind of consolidating in, can't really get up and over with follow through. And we've had, news come out and everything else. Not that this is totally a news driven market, but definitely has a lot to do with it. Okay. Now let's go to the S&P 500 and let me take everything off and I'll just draw this out with you. Okay, so the first thing we're going to do is look and see now let me pull it up, give you the bigger picture. Here's the COVID slam down. Here was that parabolic move up to the upside. And of course you can definitely see how you could have put a wedge formation here, ascending wedge, and we're far and away from the 20. You never get that far and away from the 20 before price starts, going sideways or coming down. Even, right here, the same scenario. But anyway, V-shaped recovery there. And speaking of recovery, there's three main ways that markets recover. It's the V-shape, and then you have a W, which is really the strongest and best, really what you want to see. We have a low, higher low, then we go, and then you have this big downdraft market. That's a bad illustration, but you get the point. Then you get far and away from it, and then after people forget about all the pain here, relatively so, then it starts coming back up, okay? And let me just real quickly show you that even this is the monthly chart. And back here, this was, multi-generational family wealth being made in the 20s, on electricity, automobiles, more appliances in the home, people coming off the farms, coming into the city, and, the roaring 20s, so to speak. And then this was, if you didn't know what you were doing and didn't get out, when things started, rolling over, even though that was multi-generational family wealth being made, this is multi-generation family wealth being lost here. But the reason why I bring this to your attention is that, see, not a V-shaped recovery, but this was what? A W, okay? And low, higher low, and then, the rest is history. But case in point, when we started getting back up and over the 20, that's the secret, okay? So we have that W here, down, up, down. See the low pivot there. Even on a monthly chart on the Dow Jones, going back to the worst crash we've ever had in the biggest pullback, the market does a 180, says, hey, that's enough. Powers of V come in, support it, come back down, same thing. Okay, just wanted to, kind of show you that. Let's go back to S&P 500. And first thing we're going to do, like we did on the other chart, the 200 is down here, the 20 is above that, and now price is over the 20, which is, more, this we dropped a bit, quite a bit, but we're looking a little bit more bullish than bearish. And then we're going to put our fib line here, and you don't need to do the fill. You can just kind of eyeball it and see where those prices are. Now there's your 50% zone, the halfway between the all-time high and our most recent, low in October. As you can see, we came up, well, we got over it, came down, hit that 200 again. A little trick about the 200. I know I'm getting off topic here, but you have to go back in time and see how extended up and over the 200 we are. It doesn't matter if it's Apple, Google, Bitcoin, whatever, gold, silver. When prices extended over the 200, it will come back into it at some point in time. Okay, that's number one. Number two, high odds, high probability, you'll start getting consolidation or a V-shaped hit on the 200. A lot of people make a living off of just what am I thinking? Scanning for stocks that are near the 200, and they'll go back and look, and if they've come from you got to go left in the chart, will tell you most everything you need to know. But anyway, they'll go back and see how far above at one point in time price was. Now, even though we've slowly come into it, see how it held it, okay? All right, now we've hit it once, come up, and this was this week's close right there. So that we need to get over that, okay? Get up and over that 50% zone at least to get the S&P 500 moving. Now, what we try to do here is hit this trend line down. 1, 2, 3. Okay. Normally, the third hit of that trend line, you'll get rejected. Okay. Like right here, it's resistance. Can't get, it starts right here, can't get over it, can't get over it, and you get, rejected. Now, the fourth or fifth, as we see here, most times you can start, working your way up and over it. But also let it be known, okay, nothing's easy in this business. A lot of times, according to classical technical analysis, you break over it, come back, retest, and then continue up. So we may see that, scenario play out. Time will tell. Now, okay, that's the first deal. First of all, we're over that, so that's positive. A lot of bullish stuff going on here, but still very concerned. We don't have the game won yet. We're still under that 50% zone, that halfway mark. Now, let's look. I'm gonna put my magnet on to really lock this thing in and take that off. Okay, this is our 50% zone from that from our low in October to the most recent high. And I take these fib lines off in order to clean up the chart. Less is best. Anyway, we from the bottom to the high came back. Look at that. Tagged it, tagged it. These are weekly candles, okay? So support's there, technically at this level to hold us over that 50% zone. And then we have the downtrend line. And what we're looking at now are safety nets. You've seen cartoons or even in movies, the hero falls off a building or something and he hits different things, and it kind of slows him down, slows him down, slows him down. Well, not the best analogy, but you see where I'm going. So we have the downtrend line to possibly help if, we need to roll over here for whatever reason, bad news in the markets. We have the 20 and that 50% zone right there, okay? And so that's, where we'll leave it on the S&P 500. At this time, it's not as bullish as the Dow because the Dow Jones already up and over its, long-term, halfway mark. But this S&P 500 still needs a little work there. This last one, let's do the NASDAQ. Kind of already got it set up. But let me go ahead and take all that off, build it with you. And a lot of work here, okay? First of all, on the weekly here, we notice big downtrend. The 20 is pushing to the downside. That's another thing. The 20 and the 200, when they come together, not 50% of the time, not 80% of the time, but 100% of the time, the 20, the blue line, and the purple line, the 200, will separate far and away. Like they're together, the 20 and the 200. they will go their separate ways. Okay, and now both are lagging indicators, but the 20 obviously is 20 weeks versus 200 weeks of average price closing. The 20 will follow price. Now, maybe, it's not confirmed yet, but possibly price will continue up. The 20 will circle back up and over uh, the 200 here and move far and away from it, doing what? Yeah, following the price action. Okay, now let's look back and see. Yeah, the last time the 20 and the 200 came together, I mean, they didn't touch like they are now, was back in 2010. And see how they come together, and then it's kind of like a, breathing organism. They, you know, uh, breathe in and then breathe out as price, gets far and away from the 200. Right here has been the biggest gap, the biggest space in quite a while, quite frankly. But yeah, it's a pivotal time. Uh, we haven't seen this in several years. So well, first of all, let's do that 50% zone from the all-time high to our low in October. And wow, 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 we're way up here. Okay, let me take that off. So a lot of work to do. So let's go to the next, kind of try to help it out. This run up here, swing high to swing low. There's a valid, reliable distance here, uh, chart location because of the, it was just recently done. This big leg down. Now let me take off the fib line. Now, see how important these fibs are in these 50% zones? I mean, here's the NASDAQ, okay? And this swing high to this swing low, price came up and look, 1, 2, 3, 4 times hit. Of course, you have the 20 there as well as resistance, and it was, coming down. But that's just crazy how it, nailed those levels several times. But this week we did close over it. So maybe we do get a potential run up into the next uh, level here. So we have this, kind of downtrend, up, down. We'll see if we can't get, up here a little bit and see the W. Um, we want the W's. You don't want, let me make sure I get the right one here. You don't want basically these, let me do this right. These M formation. That's what you don't want, okay? You want the W and you want that low, the next rotation here higher. So you got just a little bit, see, low, higher low, and go. And if we can keep putting that in, we'll be more and more. Because you got to, I mean, this big, huge leg down, you're not going to necessarily, you know, run back up, take it out real quickly. Now, we almost did here. Uh, well, actually, let me see. That's a different measure move. Oh, wow. Look at that. Okay, high to low came up right into it and it was rejected. Okay, I mean, you can't make this stuff up. It's crazy how these, zones work. And if you know the zones, you know what to look for, and you need every tactical advantage you can get in these markets, as quick as they can move, and everything that's involved in, and uh, causing price movement. Let's look at well, I said the last thing, the NASDAQ, but let's look at the dollar because, that's going to really cause a lot of havoc one way or the other. Now, we're going to look at the weekly here first. What I want you to notice, we have a very fine white line, and that's tagged up to this extremely strong high pivot here. And then what was pretty crazy is that the next week, this is 1 week, well, 2 weeks price action straight up, and then on a dime, I mean, boom, this week they crashed it. It actually closed under the previous week. Tried to get back up there, couldn't do it. And then, as you can see, that was the start of the end. Little double bottom here, low, a little bit higher, low here, and then we ran. And that's from this zone to the top. 50% of that is this green dash line, okay? And then we have a low pivot here where we ran up, came back, 180 reversal, and then we have this real strong move to the upside. Why is all that important? Let's go to the daily. And that's why we put those lines on there to kind of focus our eye on what we need to be seeing on the daily chart. As you can see, we've come down, and that blue dash line was our, pivot where we went up, came down, and then did a 180 on the weekly. What was it last? Yeah, it had to be, yeah, right here. Oh, in May of last year. Okay. So the point I want to make is that always look left to see where potential support resistance is going to be. But right now, as you can see, for several days, a couple of weeks here, we've really been consolidating, and they've been supporting the dollar. It looks like, because you can see all these wicks. We do have them to the on the bottom too, but mainly on the high side here. Sell off, sell off, sell off. And then if we, I'll say all that to say this, we start trading under that low pivot zone on the weekly chart where that blue dash line is, and then roll over into that 50% zone, which again is so important here from this low to this high. We start trading under there. Guess what? We're going to be, sub 100 pretty soon, and then we'll be drawn down there literally like a magnet to this 200. And like we were talking about in the Dow Jones, S&P, and Nasdaq, the 20 and the 200 always 100% of the time. When they're together, they'll split, and then when they're far and apart, they'll come back together. So yeah, the dollar we might be seeing, in slow motion here, the rollover of the dollar becoming, less important in the world financial center. But hey, time will tell. Interesting times. All right, guys, thanks for watching, and we will see you on the charts.